Hello, I'm Leo Wang, and welcome to your market breakdown. Today, we're navigating a complex landscape where new trade deals are being forged, even as the threat of broad new tariffs looms, creating a mix of optimism and significant uncertainty for investors. The most significant development is the announcement of a potential global baseline tariff, likely between 15% and 20%, which would apply to countries without specific trade agreements with the United States. This move introduces a high degree of uncertainty and could negatively impact global trade, particularly for companies reliant on imports. In sharp contrast, a major trade deal has been reached between the US and the European Union. This agreement includes a massive $750 billion purchase of US energy by the EU, which sent stocks of liquefied natural gas companies soaring. The deal also involves the EU purchasing billions in US military equipment, providing a significant lift to defense sector stocks like Lockheed Martin and RTX. Despite this positive deal, the broader market reaction has been muted. The S&P 500 saw little change as investors brace for a volatile week packed with major corporate earnings, a pivotal Federal Reserve meeting, and key economic data releases. Some analysis suggests that due to high valuations and trade uncertainty, investors should prepare for heightened volatility in the near term. However, there is a current of optimism, with some market strategists raising their S&P 500 year-end targets to a Wall Street high of 7,100, citing progress on trade negotiations as a key factor. On the corporate front, there have been several standout performers. Samsung Electronics shares surged over 6% after securing a landmark $16.5 billion contract to supply semiconductors to Tesla. Meanwhile, Nike shares gained 4%, as new analysis points toward a strong potential recovery path for the athletic apparel giant over the next several years, boosting investor confidence. In conclusion, the market is in a state of flux. We're seeing a tug-of-war between major geopolitical risks, like the proposed global tariffs, and positive catalysts, such as the US-EU trade pact, and strong corporate performance. Investors are advised to remain vigilant, as developments in trade talks and central bank policy will be the primary factors moving the markets this week.